Guys, hello and welcome to Cryptocurrency Blockchain News, your source of cryptocurrency and blockchain aggregated news of the day. Now, if you're here yesterday, you know I was drinking and smoking, and I'm smoking and drinking again today because I'm hungover from yesterday. And as you know, well, the best cure for a hangover is to have some shots. So I had to have some shots. I'm drinking some shots so I can do this show because I'm mangled. But guys, I gotta listen. You're about to be rich. Oh yeah, Shamari, really? I'm about to be rich? Oh yeah, you are, and I'm going to show you why. I'm going to show you why. It's not a fantasy. It's not a thought anymore. The reality just came today, and I'm going to show you. But first, we got to do a couple other. This is a news show, so we have to do news. So we have two issues of the EOS mainnet. We're going to show you about the EOS mainnet, what happened over this weekend. Digital inheritance. This is interesting. What happens if you die? Well, who's going to inherit all your crypto? It's like your money, right? You have money in the bank. Well, when you die, someone inherits it, right? What about your crypto? There is a solution, and we're going to get into that. And then, finally, because I'm probably going to talk a lot of shit on this one, so that's why I made it the last story, because you are going to be rich. You're going to be rich. Let me put one word. I'm going to just say one word. I'm going to tease this story a little bit. I'm going to put one word, custodianship. Custodianship. You are going to love that word for the rest of your lives. All right, I'm going to show you. So let's get to it. Let's get to this bumbaclot business we have to deal with, right? Yes, I'll star. As we usually do, let's go to our market moves of the day. Let's see what happened in the markets today. Booyaka. As usual, we got the top 10 usual suspects, as I call them. Bitcoin, Ethereum, Ripple, Bitcoin Cash, EOS, Litecoin, Stellar, Cardano, IOTA, and Tron. Market moves, well, only 0.38% for Tron. So 0.3 to about 5.2% in the top 10. Let's check out the rest of the market. Oh, someone went down there. Tether. Someone else went down there. Was that Dash? Dash. They got a cool commercial with the cheetah on it. All right, anyways, so let's look. But everyone else is green, 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 green. Low single digits. Low single digits. Low single digits. All right, so it's kind of a bummer, right? When you're seeing just double-digit losses and then just a couple single digits coming back. Anyways, let's look at the big movers of the day. Booyah, Dokademic, 14%. I wonder what those guys do. Dropel, we talked about those guys the other day. We saw them on one of our market things. They're moving up again, 11 point. Basic Attention, up 10. Redcoin, up 10. Dentacoin, up 9 and change, almost 10. So, that top 10 earners of the day were Dokademic, Dropel, Basic Attention, Redcoin, Dentacoin, Ontology. They're launching their mainnet soon, so you might want to stock up on some of that Ontology because they're launching their mainnet soon. Nulls, Q, Ash, or Cash, I guess, Waves, and Factum. All right, those are our big movers of the day. Now, let's get to this EOS story. As you guys know, I reported it. EOS mainnet froze. It crashed this weekend, and they had just launched the mainnet, so that puts a little sully on your reputation. But anyways, let's just get in the story, and then I'll give my own analysis in a second. You may have missed it, but over the weekend, transactions on the live EOS blockchain came to a complete yet temporary halt. Here's the EOS authorities, what do you call this? Tweet. Coming less than 48 hours after the much-anticipated blockchain network went live, the announcement kicked off a social firestorm, not to mention a reported 5% drop in the value of the network's cryptocurrency. Some background, the EOS launch, reported last week by CoinDesk, came at the end of a topsy-turvy period illustrated by last-minute code tweaks, an elaborate election of entities tasked with creating the network's transaction blocks, and of course the $4 billion EOS token sale. Now remember last week the EOS blockchain should have been online, but then the people who owned EOS, I guess they didn't know or forgot or whatever, that you had to actually vote and which blockchain you're going to implement. So they finally did that shit. So it came as a surprise to some that the network would run into enough trouble that it triggered a failsafe network freeze. And unsurprisingly, critics of EOS were quick to pounce. Blah, blah, blah. This guy's talking shit about EOS here, EOS there. I'm not going to read all these. There's Jim Cramer, what a moron. Mad money moron. Do you know that 2 days before, 2 days before the fucking housing crash, he was like, I think it was Bear Stearns. He was like, buy Bear Stearns. I see it going up to $65. 2 fucking days later, it was at $2. And then a couple days later, they went bankrupt. He's a moron. Don't ever listen to that motherfucker right there, okay? First of all, CNBC is a joke. The housing bubble was happening, and then the crash came. I thought you guys were supposed to be experts. Why didn't you warn about a crash? They're not experts. They're just a bunch of reporters, bunch of fucking losers. I made money in the crash anyways, trading Forex, so that was great for me, but you know what I'm saying? Don't trust them in terms of, like, you know, investment advice and crap. They get paid to pump certain stocks and whatnot. Anyways, but back to EOS. Oh, fuck, I hate CNBC. They're a bunch of fucking losers. If you're going to watch some financial news, at least watch Bloomberg. Anyways, though, but back to this stuff, crypto crap. A patch to fix the issue was released. The issue of the EOS network freeze was released in less than 5 hours later. However, in the fast-moving world of crypto, there was already damage done to the network's reputation. Oh yeah, and so this guy, he's a big guy. This tweet we're looking at here, Emin Gun Sirer. So there's also news on the net today about him, and he says, I'm calling it, there will be a massive exchange hack within the next year, taking advantage of the EOS vulnerability. That exchange will lose its hot wallet. Hackers will send the proceeds to downstream exchanges where they will trade into other coins. I don't know that guy, but if you respect what he says, that's what he's predicting. So that's not to say that EOS didn't have any comments or outright supporters going to bat for it. Among the notable voices offering support to the project was Zcash creator Zuko Wilcox, who wrote kudos in the wake of the bug response. So what he wrote was, oh, I'm glad you guys told everybody, da-da-da-da-da. And like people were just like, what are you talking about? Asked if he was joking. He was quite clear. The answer was no. EOS response in his eyes was exemplary. So he's looking at more from the response point of view of, you know, they informed everyone of the problem. For others, the expectation of a perfect launch was an unrealistic one to begin with. And it's probably safe to say that some members of the EOS community aren't too concerned about the network stoppage given the move to repair the bug. And so a couple people say, blah, 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 you know, it's a new network. Of course, things are going to happen. Blah, blah, it got fixed. And an old debate about EOS was made new. And while EOS blocks are moving once again, it's clear there's one thing not going anywhere. The debate over the degree of centralization of the network, on the network. You remember yesterday's show, it's true. They only have like 20-something block producers, they call them, which are the miners. Like in Bitcoin is miners. Well, for EOS, they're called block producers, and there's only 21 of them. So people are just like, you know, that's not enough block producers. Right? I mean, it's pretty centralized if there's only 21 of you guys. Anyhow, so that's the debate. For EOS, the centralization risks are unique and put it on display thanks to this weekend's issue. As a result, though, the mainnet platform is not owned by any singular authority. These block producers act as de facto leaders, able to make executive decisions on proposed changes or, in this case, fixes to the network. Since the design inception, critics have been concerned of the centralized power of block producers, and now with the latest issues, upgrade 1.0.05, they have a real case of that power in action. So that's the first thing. And so then someone complains about the only 21 block users, and in response to the criticism, EOS maintains its distribution of tokens, and block producers remain far from centralized, pointing to the global distribution of block producers. I don't give a fuck. I'm not going to bullshit you. I think they're centralized. I don't give a fuck. You have 21 guys, they're around the world, so what? Just because they're around the world doesn't mean they're decentralized. I mean, anyone can make a phone call, write an email to someone. I mean, you don't have enough guys, right? It's not really where they're located. And for me, it's how many you have, right? Like Bitcoin, right? There's a gazillion miners, right? In Ethereum, there's a gazillion miners. You guys, these guys, EOS only has 21. That seems pretty centralized to me. So make your own opinion. And that's the story of EOS for this weekend. Now, this is an interesting one. Like I just said, what are you going to do with your money when you die, right? When you die, let me talk to you here. When you die, you have a will, right? So you say, yeah, my house goes to, I don't know, my favorite kid. The car goes to the second favorite kid. You know, the money goes to the wife or something. I don't know. You know what I mean? But you have a will, and you know, what do you call that? You know, just allocate all your assets to your loved ones, right? And so what about your crypto? Isn't crypto an asset? It sure is. It is money, isn't it? You paid for it. So these guys, Safe Haven and VeChain, have come up with digital inheritance. That's genius. Well, let's go here. Digital inheritance, which is fucking genius. And we're going to check that out now. So your kids and loved ones, don't worry, guys, when you die, your Bitcoins will be in good hands with your loved ones, all right? We have a quick shot here, and then we'll get to it, all right? Fuck. Dude, man, when you're hungover, I'm hungover from yesterday. Oh, my gosh. It's like 7 in the afternoon. I'm going to go to sleep after this. I got to sleep this. I live in South Beach here, guys. We party hard around these parts. Anyways, so digital inheritance, motherfuckers. Let's check it out. Now, VeChain Foundation yesterday, June 17th, announced that Safe Haven, a platform that provides solutions for digital inheritance, will be moving to the VeChain Thor blockchain. Remember that we did a story about VeChain the other day, and this Thor network, Thor blockchain, right? And that big shipping company joined it. Now another company is joining VeChain. So I remember we talked about it, and the Chinese government did a bunch of contracts with VeChain. So I don't own any, but I'm looking hard. I'm looking hard to own some of this. Oh, yeah, I'm looking real hard. Anyways, though, with this realignment, Safe Haven and VeChain aim to create powerful solutions and access to impactful business and development resources. Blah, blah, blah. Here's their tweet announcing that they're together now, lovers and partners. Safe Haven is a platform which is building cutting-edge security and continuity solutions for various markets by combining legal entities into a decentralized solution for the inheritance of passphrases, bank accounts, social media accounts, and cryptocurrency. So, you know, you'll pass on your Facebook and Twitter pages to your children when you die. Your cryptocurrency and obviously your bank accounts, but also passphrases, your login information to these platforms, right? So VeChain Foundation's Medium announcement read, after reviewing their company's technology, network, and background, we see true value added to our platform by working together in partnership. This partnership will allow users access to a host of necessary solutions for continuity. Continuity when you die. So what's digital inheritance? Digital inheritance is the process of handing over digital assets and rights associated with it to beneficiaries, a human beneficiary. The process includes knowing what digital assets and rights exist and dealing with them after a person has died. Excuse me. Safe Haven platform built on the VeChain Thor blockchain, provides solutions for digital inheritance and continuity by working in harmony with their patented Trust Alliance network in providing additional legal services to crypto asset owners. Safe Haven envisions a future where all owners can easily create methods to distribute their digital inheritance and business continuity plans to their partners and loved ones. So how does it work? Initiators within the protocol, the investor who wants to protect their legacy, can share seeds and private keys with any amount of stakeholders that they define. Depending on the provisions of the smart contract, one person or all of the members of a specified group would need to be present, would need to present the needed shares, the encrypted piece of data, to unlock the assets. This means that the initiator maintains 100% control of the assets so long as they're living. So it's like, you know, you got your MIOTA wallet, and you give these guys, what's their name, Safe Haven, permission to kind of tokenize it in a way and create a password. And then when you die, those people present that password, and then these guys give them the MIOTA wallet, I guess, private key. So there are various products that Safe Haven offers: the Family Circle Plan, the Business Continuity Plan, Investment Circle, Safe Haven Vault, and Safe Haven's 100% open source hardware ledger. All right, so that's how that works. Oh, man, now let's get to the real news that I want to talk about, because this is the shit right here. This is the shit right here. You're going to be rich. You are going to be fucking rich. I'm telling you, and I'm going to show you why right now. We talked about this the other day. The big news in the crypto world right now, I got to have a shot for this one. The big news in the crypto world right now is custody. What is stopping the big money from coming in to this market, to the cryptocurrency market? I know a lot of motherfuckers talk about whales. Oh, these whales are here. Fuck whales. Whales. So one billionaire buys a bunch of Bitcoin. So what? One billionaire buys a bunch of Ripple. So fucking what? Do you know what a hedge fund is? That's when a bunch of fucking whales, a posse of whales, you know, come together and put their money into one fund, one massive, dirty, stinking fund, and then they unleash that money on whatever market they want. That's what's about to happen. That's what's about to happen. Hedge funds are about to come into the market. The SEC just said that Ethereum is not a security. Guys, you're going to be rich. You're going to be fucking rich. And I'm going to show you right now. Bang. Regulated cryptocurrency will bring in the big money. I've been saying it. A hedge fund manager, though. I'm going to let you listen to a hedge fund manager, and I'm going to let you see what's been going on in the market big time. This is huge news. I'll even show you right now. This wasn't even on just that little shitty little website right there. Hold on. Watch this. Because I got to show you it. I got to show you it from the real deal. I got to show you it from the real deal. Okay? Let's get to this shit right here. Okay? I was going to read this story, but it's a little bit more in depth. I thought maybe you might not like it but I got to show you to prove it to you. There you go, guys. Here you go. Boom. On Bloomberg, motherfuckers. Bloomberg. If you know anything about economics, if you're a trader like me, I'm a Forex trader, you can go to forexfactory.com, type in my name, SHOMARI. You can see all my trades. I don't work a 9-to-5 job. My money makes me money. Bloomberg, booyah, regulated crypto custody is almost here, and it's a fucking game changer. I'm going to read it to you from this one, though, from this article, because it's just easier to understand. Bloomberg is a little more, you got to be into the markets and stuff to understand that. I don't know if you guys are really traders or anything. You're about to be rich. Now, the problem is, so I'll tell you what, I'll just talk to you, and then I'll read this. The problem has been custody. Look, if you're a hedge fund manager, if you're a hedge fund guy handling all these billionaires' money, when you buy something, say like Ripple, you're not buying, only like 50,000 Ripple. You know what I mean? You're buying like 50 million Ripple. Well, where do you keep those? You're not, as a hedge fund manager, you're not allowed to keep, you're not allowed to keep your client's money on like some Ledger Nano or in a MIOTA wallet or something, right? It's called custodianship. We talked about it last week. Custodianship is the big deal. When this hedge fund comes, they're not going to buy like like 100 Bitcoin. They're going to buy like 10,000 at a rip at a time. And so you got to keep them somewhere. And so it's their clients' money, and they have to keep them in licensed custodians. Licensed custodianships, custodian companies. So like JP Morgan has one. We're going to read right now, Coinbase is starting a new custodian, institutional investor custodian service. And so let's read about that shit right now, because that's the shit right there that's going to make us rich. Like, seriously, guys, I'm not even bullshitting you. I said this before in videos way back when I first started this, just as a joke, but I mean this. In 2020, the New Year's of 2020 to 2021, I'm going to get a mansion here, maybe borrow friends, and we're going to have a party, and we're going to fucking celebrate. Cryptocurrency Blockchain News is going to throw a party at a mansion on the New Year's of 2020 to 2021. I'll provide all the champagne and everything, because we're going to be rich. I don't give a fuck where you are, who you are, where you are. You come on down here to South Beach, buddy. Yo, we are going to fucking... You want to see what this place is really like? I'm going to show you, because we're going to be loaded, rich, loaded. My buddy's got yachts. I got a buddy with a plane. We'll take some flights around down the beach and everything. You're going to be rich, and this is why. Custodianship. This is going to be... Custodianship is going to be your favorite word for the rest of your fucking lives, motherfuckers. No bullshit. It's going to be your favorite fucking word. Because through custodianship, licensed custodianship, the whales are coming. Do you hear the orca? Do you hear him? He's coming, and here it is, and I'm going to read it. Let's go. I'm just so happy. Oh, my gosh. Oh, my gosh. Anyone who stays in the crypto space long enough begins to recognize the familiar mantras. Don't invest more than you can afford to lose, obviously. We're in the early days of the internet. That is true. And adoption is coming. Absolutely. All companies are starting to look at the blockchain and see how they can implement it. They're all valid points. And currently, the latter is being held back by lack of regulation and typical financial services, keeping cryptocurrency on the sidelines of the global financial markets as a fringe space, a risky investment with no guarantees and no oversight or protective measures. Look, millionaires and billionaires around the world, they're not down with this shit because of what he just said. Because it's looked at as a fringe thing. It's what your kid who's got green hair and a bunch of, rings in his nose and ears and shit tells you about, right? The adults, the people with the money, they're not hearing that shit. They don't want to hear that crap. But once this custodianship comes in, they realize it's real. Wait a minute. Oh, for real? Oh, it's regulated by the government? Oh, the government's promoting it? Oh, so it is a valid asset class to invest in. And so hedge fund manager, Semini, told Bloomberg in a phone interview, there are a lot of investors where custodianship was the final barrier. The only reason the money hasn't come in is custodianship. Okay? Over the next year, the market will come to recognize that custodianship is a solved problem. This will unlock a big wave, of capital. Unlock a big wave of capital. That's why companies and people aren't investing. The institutional investors aren't here yet. Where do I put this stuff? They're not going to, if you're a hedge fund, you're not leaving your money on Bittrex or Binance or anything. They get hacked. You're responsible for your client's money. Now, Samani has been testing Coinbase's new custody service. Coinbase just started it. One of many launched throughout the ecosystem. The Korean authorities recently admitted to delaying crypto regulation simply to avoid further legitimizing the movement. But regulation is on the way, and the financial services And so, too, are the protections and safety mechanisms enjoyed by those of the traditional banking system. Right? Like when I trade Forex, I trade on Forex.com, and I used to trade on FXCM until they went under. But, you know, my trades and my derivatives that I have, they're being held by someone somewhere in some sort of licensed something. You know what I mean? Like, I don't know where, but they are. And that's what people have been waiting for. That's what the big money dogs, have been waiting for. Custodianship. Who's going to hold my stuff? When you're a gazillionaire, you know, you're not going to hold your stuff on Binance and Bittrex and all that kind of stuff. You know, you want to know, look, if my money's not safe, forget it. Forget crypto. You know what I mean? I'm a gazillionaire already. I have all my money and all this other stuff. So, blah, blah, blah. But once the crypto comes and says, hey, guy, we can keep your money safe for you. Oh, yeah. It's all good. And it's licensed by the government. Well, now that guy's like, perhaps. You know what I'm saying? So, Global Financial Services Group's Nomura recently launched institutional-grade custody services for cryptocurrency assets. And earlier this year, BitGo acquired Kingdom Trust, a $12 billion blood clot dollar asset manager, to act as custodian for their assets, with talks of BitGo even becoming an independent custodian in the future themselves. Yo, I hope you guys are realizing the depth, like the reality of this situation here. The big money is coming. You need to get all the crypto you can get your fucking little hands on right now. Once that big money floods, these are institutional investors. These are wise investors. They're going to be looking at, you know, who's the CEO of each crypto space or crypto company? Who's the project manager? Who's all the... Look, the top 10 cryptos, I'm not telling you what to do with your money, but if I were you, look, guys, start grabbing crypto. If there's crypto that company that's partnered with a major corporation or a major government, I mean, I'm just saying, probably a safe bet, right? Probably a safe bet. I'm not telling you what to buy, which one. I don't shill, but I'm telling you, I own most of the top 10, and I'm about to load up more. I'll tell you the truth. What I do is 30% of all my net income, I just put in crypto. So every month I just look, what were my profits? And after all my bills are paid and all that, and then 30%, crypto. I just keep loading up. So here we go. Bring on the whales, motherfuckers. Yo. Oh, sorry, my bad. We got to start here. While these services may be seen by some as centralized and or requiring trust, the kind of phenomenon many turn to the crypto space to avoid, these optional safeguards are necessary for increasing the value of institutional investment. Exactly. Yeah. All this crypto crap, I talked to you guys about it. If you guys have this fantasy about, you know, we're going to live in some world where, yes, there's going to be no fiat currency, and yes, we're all going to just have these private bits of money. Look, that crap's not going to happen. But you are going to get rich from this stuff. It's not, the American dollar ain't going anywhere, buddy. You think Uncle Sam's going anywhere? For you who aren't in America, Uncle Sam is the name of this sort of fictional guy that controls America. You think Uncle Sam's going anywhere? He ain't going anywhere. But he'll let you rock some crypto. You know what I mean? But he's going to let us rock crypto, so we're going to make money, and that's what I'm in it for. I'm in it for the money. I don't give a fuck about all this philosophical crap about libertarian nonsense. You want to go live in a libertarian society? Go live in most countries in Africa, buddy. There you go. Your government does nothing for you, and you better be rich so you can pay for your own stuff. Anyways, bringing in the whales. Regulated custody services allow institutional traders to open huge, do you understand what I'm saying? Huge positions. Not like you and me, motherfucker. Just buying 10,000 Ripple here, 2-3 Bitcoin here or there. Yeah, they're going to be buying, 2,000-3,000 Bitcoin at a time. They're going to be buying, 4 or 5 million Ripple at a time. Huge positions on the stock. Damn, man, I am hungover, man. On the stock market without having to take personal responsibility over the custody of the funds. This allows hedge funds to give their traders millions of dollars without risking them flying to the Bahamas with it. And it helps prevent outside theft and accidental losses as well. essentially acting as an insurance policy for the millions of billions and billions being traded every day. That's the thing, right? If you're a hedge fund guy, and I've got the money of a bunch of billionaires, motherfucker, you better not lose their money. So you put it in a custodianship, and then if any money gets lost, well, it's up to the custodian to deal with that. You know, like, hey, you know, you tell your whales, hey, man, I put that thing in the custodianship. They lost it. You got to go sue them, not me, right? And that's what's happening, and that's what's going to make the crypto market, oh my gosh, we're going to be rich. Similar options are currently limited in the crypto market space, and that's the thing. It's limited because they don't know how to hold cryptocurrencies, right? The industry itself, the custodianship industry, you know, they know how to hold stocks and bonds and MBS and CDOs and everything for you, you know, but they don't know how to hold cryptocurrencies. So similar options are currently limited in the cryptocurrency space. And institutions wishing to send their traders into the fray have to accept major risks in doing so. It's difficult to track crypto assets, even more difficult to return them, and sending funds to the wrong address will usually result in their permanent loss, all of which is new and unfamiliar territory for some. You know, these guys don't know about private keys and public keys and all this, right? They're like me. I didn't know about this crap, right? We're a bunch of traders. Like, I know how to trade the Forex market. You know, I know how to apply a Fibonacci retracement and, you know, a Fibonacci expansion for my price targets and stuff. But, you know, if you were like, yeah, I want to, you know, Shamari, you know, here's some money, you know, trade and hold crypto for me, right? In a proper way. Like, I don't know. So you need these custodianships. So traders from major firms operating in the crypto market are currently in personal control of huge amounts of money in space rife with hacking and phishing scams with little to no regulatory oversight to protect investors. And that's why the big money doesn't want to come. The big money doesn't want to come if there's no regulators, if there's no one watching, there's no cops on the beat watching to make sure that their money is, you know, safe and protected. But with high levels of security come high level of fees. So here we go. Coinbase charges, they just started their new thing. Coinbase, their custodianship program, whatever, offering service. Coinbase charges $100,000 for setting up custody services at the moment, along with 10 basis points per month and a minimum balance of $10 million. The funds are held in cold storage and require up to 2 days to remove due to the various security protocols that need to be bypassed. A far sight from simply storing funds on a paper wallet, right? If you're a hedge fund, you can't store your shit on a paper wallet. It's crazy. However, once major firms begin to trust the new and secure infrastructure being developed, major investments will follow. Let's look at this again. Major investments will follow. Major investments will follow. Now, when major investments follow, what the fuck does that mean? Well, that means your crypto's going to rise, buddy. Whoever you are right now watching this shit, watching a fucking joker like me drink and smoke in front of you and talk shit, you're going to be rich. You're going to be flipping rich. Oh, you're going to be rich. The cryptocurrency market cap is currently $275 billion. Compared to a global stock market cap of approximately $100 billion. In order to grow the cryptocurrency space, institutional investment, $100 trillion, yeah, not $100 billion. Fucking Facebook is like $600 billion. In order to grow the cryptocurrency space, institutional investment is needed. Yep. It's going to grow, baby. Grow. With crypto startups exploring custodianship along with existing Wall Street custodians like JP Morgan, Northern Trust, and Bank of New York considering expanding their services to the world of crypto, it seems like a matter of time. Look, motherfuckers, it's just a matter of time. It's just a matter of time before the level of investment in the space changes dramatically. It is just a matter of time before the level of investment in the space changes dramatically. Let's get real. It's just us guys, right? We're just a bunch of retail investors. We're just a bunch of cowboys out here in this crypto world. You know, you're just spending your own money. The next guy's spending his own money. Once the institutional investors come in, like I said, they're not buying, you know, just 50,000 Ripple. They're going to be buying 50 million Ripple at a time, like one hedge fund, right? All those hedge funds are going to be doing that. Your holdings are going to rise in value. They're going to rise in value so hard. So look, and this is what I meant about me ranting. So I'm going to rant a little bit. Let me hold on. Let me rant a little bit from here, motherfuckers. Okay. Look. Okay. You're going to be rich. The big money's coming. Bring on the whales, right? That's what they're waiting for. They're waiting so that their money is secure. And so right now is the time. So I'm going to tell you something. So my view of this crypto market is this. This year right now, these kind of things are starting, right? Like companies are starting to create custodianship and starting to apply with the SEC to be legal custodians. The SEC, so for those of you who don't know, here in America, that's our Securities and Exchange Commission. They control the money kind of, well, the exchanging of money of securities and stuff. And so right now, this year, that's what's happening. Companies are applying with the SEC to be custodians and also to be hedge funds of cryptocurrency. Next year, once the SEC approves these things, which will be later on this year, well, next year, these guys are going to start setting up their stuff. Well, they got to hire a bunch of code monkeys, programmers, to program this stuff for them and then get it all set up. By the middle of next year, by the middle of 2019, money, big fucking money, is going to start slowly trickling into the market. By 2020, it's going to be a rampage. There's going to be a rampage of money, just a tsunami of money. You know, like not a flood of money, not just a flood, a fucking tsunami of money is going to come from institutional investment. And when that comes, all your holdings, oh my gosh, they're just going to grow. It's going to grow huge. All of us, we're millionaires. Seriously. It's going to create, and then also consider this. Okay, so that's America. And America, man, we have a lot of money around these parts. But think about when the Europeans do it. The European Union does it. Think about if China finally starts to, you know, countries are not going to want to deny their citizens the right to make money, right? Like the citizens are going to be like, yo, regulate. Come on. We want to make money too, right? They're going to be pissed. And so it's going to just unleash a global, like I said, tsunami of money. Tsunami. Like, what is that? You know, it will be looking like, John, do you see what that is? I don't know. It's green. It's coming here like, Bill, do you see that down there? Yeah, it's green. And what is that? It's, holy shit, it's a tsunami of money. Like, that's the shit. A tsunami of money is coming. All right, guys, so I'm not going to keep you. I know you got lives and jobs and wives and kids and stuff. I'm blessed. I don't have any of that kind of crap. So let's go over plus I'm flipping drunk, so I got to get the hell out of here. Let's go over this one last time. Let's refresh this screen. Let's check out our loot. Bitcoin, Ethereum, Ripple, Bitcoin Cash, EOS, Litecoin, Stellar, Cardano, IOTA, and Tron for the top dogs of the day. And listen, guys. I'm not bullshitting you.